Welcome to the Explainer. Okay, let's talk about Robinhood. Now, on the surface, you see this massive success story, right? The app that completely changed how we invest. But if you dig just a little deeper, there's this really fascinating and kind of puzzling transformation happening as we speak.
So let's get right behind those headlines. We're going to unpack the surprising evolution of the app you think you know, because trust me, the real story here is so much more than just free stock trades.
All right, to really get what's going on, you've got to start with the numbers. And honestly, their latest quarterly results are, well, they're pretty eye-popping.
Okay, first up, just look at their revenue for the second quarter of 2025. We're talking an incredible $989 million.
Now, that's a 45% jump from the same time last year. I mean, that's a huge number, right? But believe it or not, that's not even the most interesting part. No, this is what really grabbed my attention. Their net income, we're talking actual take-home profit, hit $386 million. So, get this. That profit has more than doubled in just 1 year. That's a jump of 105%. So just think about that for a second. Revenue is up a very impressive 45%, but their profit is up a staggering 105%. And what you're seeing right there, that is a textbook example of this really powerful concept called operational leverage. It's basically a key sign that the business is getting incredibly efficient. They're making way more profit from every single dollar that comes in the door. So the big question is, how are they pulling off this kind of explosive, super efficient growth? Well, the answer lies in their new playbook. It's all about building a much more resilient business.
Okay, this is where you can see the key shift happening under the hood. If you look closer, their crypto trading revenue actually went down last quarter. But, and this is the important part, their total revenue still went up. So how's that possible? It's because of a 25% jump in what's called net interest revenue. That's the stable, predictable money. And this proves they are absolutely not a one-trick pony anymore.
And you know what a massive driver of this newfound stability is? Robinhood Gold. I mean, subscribers to their premium service just exploded. We're talking an incredible 736% in 1 year. That is 3.5 million people paying them a fee every single month. And this, my friends, is a classic land and expand strategy, and they are executing it perfectly. You get people in the door with that famous free stock trading, right? And then, once they're in, you start offering them more valuable, long-term products to really deepen that relationship over time. And speaking of expansion, a huge part of that is their retirement offering. It has been a total runaway success. It's already pulled in an incredible $20 billion in assets. Just wow. You see, this IRA match they offer is a huge competitive advantage. Everyone gets a 1% match on what they put in, but if you're a Gold member, boom, they boost it to 3%. It's just a super powerful incentive that captures what people call sticky money. It locks in customers for the long haul. Okay, so let's recap. The business fundamentals look incredibly strong. The strategy is clearly working, and growth is accelerating. Everything's great, right? Well, this is where the story gets a bit more complicated. So because of all this success, the stock, it trades at a pretty significant premium. Its price-to-earnings ratio, or PE, is over 50. Now, what that means in simple terms is that investors are willing to pay $50 for every single dollar of the company's annual profit. And that tells you one thing: market expectations are already sky high. And look, on the one hand, you can totally see why the valuation is so high. You've got this major vote of confidence from the big institutional funds, the so-called smart money. They own nearly 60% of the entire company. But then you look at the official filings, and you see something that just feels like a bit of a head-scratcher. You see this sustained, consistent pattern of selling by the company's own top executives. And look, I get it. Executives sell shares for all sorts of personal reasons. They need to diversify, pay taxes, you name it. That's normal. But when you see a consistent pattern of selling coming from the very top, we're talking the CEO himself offloading 750,000 shares, it just can't help but send a, shall we say, mixed signal. So here it is. This is the central contradiction we're talking about. On one side, you have this incredibly powerful growth story, strong fundamentals, huge institutional backing. And on the other side, the very people running the company are consistently selling their own stock. It really makes you wonder, right? Do their actions actually match the company's super optimistic story? Okay, let's step back and try to put all these puzzle pieces together. What does this dual reality actually mean for how we should think about Robinhood today?
So, what our deep dive really shows is an impressive, well executed turnaround. I mean, no doubt about it, Robinhood has successfully diversified its revenue, and its execution on things like gold and retirement is undeniably strong. But here's the catch, that premium valuation, it pretty much screams that the market already sees all this success and has priced it all in.
So, this all leads to a much more nuanced picture, doesn't it? The business fundamentals are solid. The company is performing incredibly well. But the stock price, it just might already be reflecting all of that success. Or, to put it another way, it really seems like all the good news is already baked into the price. And so, that leaves us right back where we started, with this central puzzle. You've got a company that is firing on all cylinders, financially, strategically, you name it. And at the exact same time, its own leadership is consistently selling off their stock. It is a classic market contradiction. So the big question for you, for me, for any investor is, how do you square that circle?